Problem number 7. H Limited purchased control of S Limited on 1/4/2017. 1/4/2017. The following are the balance sheet of H Limited. The following are the balance sheet of H Limited and S Limited as on 31st March 2018. 31st March 2018. So now it consists of, my dear friends, share capital consists of 12 lakh and 6 lakh. General reserves 1 lakh and 1 lakh 20 and 1 lakh. Profit and loss account 2 lakh and 2 lakh. And creditors 2 lakh and 1 lakh 60,000. Now, assets consist of land and building 2 lakh 20 and 2 lakh 80. Plant and machinery 4 lakh and 3 lakh 60. 45,000 shares in S Limited. At cost, it is 6 lakh 75,000. It is at cost. Stock in trade 90,000 and 40,000, and debtors consist of 1 lakh and 1 lakh 80. Cash at bank is 2 lakh 35,000 and 2 lakh. Finally, small balance sheet tallied. On 1/4/2017, S Limited has 1 lakh in a general reserve and 1 lakh 20,000 credit balance in P&L account. P&L account. P&L account. Stop. Continue. In July 2017, 10% dividend was paid by S Limited, that is a subsidiary, for it is not 2000, it is 2017, year 2017. That means it is previous year. Yeah. So usually, my dear friends, up to 31st March, year end is over. So for that year, financials and all we will prepare after auditing. So maybe after some 3 months or 4 months, we will call for AGM. In AGM only, we will declare dividend for previous year. That is for the shareholders as on the date of 31st March of previous year. Correct? Yeah. So like that. So this year, so out of profit. So here what happened? Dividend was paid. So bonus means in the absence of information, we will use general reserve. Dividend for previous year means we will use previous year profit. Got it? Yeah. Like this year, so P&L. So here, out of previous year, whatever the opening balance was, P&L was there. Out of that, we have to declare dividend for 2017. So received for dividend received from S Limited was credited to profit and loss account by H Limited. So that means wrongly credited to P&L. So debtors of S Limited include 25,000 due from H Limited. So it's a mutual owings. So prepare consolidated balance sheet. Prepare what? Consolidated balance sheet. Yeah. So this is what, prepare consolidated balance sheet. So this is what we are going to prepare with. That's it. Yeah. Let's go to the solution. So start with quick. Solution. Question number 7.
Sir, can you repeat the amount of utilization of amount for a dividend from the P&L and general
In working
reserves?
anyway, we are doing it, right?
Okay, sir.
Yeah. Question number 7. Question number 7. Page number Pramod 26.
Yes, sir.
Solution. Yeah. So to start with, step 1.
Date
So
of
these are all
control.
working notes. Working notes. So first to start with, step 1. Date of control. Date of control, it is
1/4/17.
1/4/17. 1/4/2017. Next. Step 2. Shareholding pattern. So here, so holding company is H Limited. H Limited, which acquired 45,000 shares out of 60,000. Into 100, you get 75%. Therefore, non-controlling interest 25%, total 100%. This is balancing figure. Yeah, sir, how you got 75%? How you got 60,000? So 6 lakh rupees 10 each. Divided by that, you will get it 60,000 shares. Next, step 3,
Analysis of profit of
analysis of
subsidiary.
profits of subsidiary, yes, limited. Yeah. So first one we have general reserve. General. So here only two adjustments are, my dear friends. One is pre-acquisition dividend. Second one is uh, intercompany owings, debtor creditor. Intercompany owings. So that's it. So apart from that, nothing is there. General reserve. So general reserve closing balance is as per balance sheet 1 lakh subsidiary company's balance sheet. So out of this, my dear friends, what was opening or
1
pre
lakh.
1417, which is 1 lakh. So therefore, current year it is nil. So if it is a opening means we call this as capital profit. So this is nil. Leave it. Then let's go to the B. So to have revaluation, nothing. Revaluation in this problem, nil. So therefore directly go to profit and loss account. Profit and loss account. So profit and loss account total balance was 2 lakh. 2 lakh. So out of this, yes, Geeta madam, concentrate. Yeah. So it was opening balance. Opening
1 lakh.
balance, or we can call it as pre, that is 1417. On that, how much was that?
1,20,000.
1,20,000. So out of this closing balance is 2 lakh is there. This is what closing balance. So out of opening balance, they have declared the dividend for previous year.
Yes, sir.
So therefore minus. So dividend for 2017. So capital is 6 lakh into what percentage they have declared? 10 percentage.
10%.
10 percentage. So therefore 60,000 would have been paid out of opening balance. Therefore, how much would have been their opening balance? 60,000.
60.
So 2 lakh minus 60,000. That means how much is current year?
140.
1,40,000 would have been current year balance. Since control is acquired at the beginning of the year, completely this 1,40,000 is post. Current year, which is called as post. So this is my revenue, this is my capital profit. This is my revenue profit. Yeah. So Geeta madam artha aita?
Yes, sir. Yes, sir.
Yeah.
In case of profit and loss account is not there, we can use the general reserve, sir.
Yes. Provided if they would have said it. I hope in section 123 would have read it. Dividend can be declared out of current year profit or out of previous year profit or out of both, which are revenue profits, which are cash profits.
Yes, sir. But in problem, they have to specify which is they are using.
They will say what adjustment they have done.
Okay. sir. Okay. sir.
Okay. Let's go. Step number 4. So here fair value changes is not there, so therefore ignore. In your study material, my dear friends, only limited problems is there. Only 5 problems, 6 problems are there. So that anyway, over a period of time in a class, we will solve it. That. So beyond that, many problems I have taken in order to make you to understand the concepts I have taken from other sources. Step number 4: apportionment of appropriation of profits
Profit
or
between holding and subsidiary.
yeah,
NCI.
apportionment of profits. Apportionment of profits between holding and subsidiary. So here we have analyzed capital profit and revenue profit, two types of profit. So first is general reserve. So general reserve you have to call in other, that is in India's language, it is like other reserves. So P&L, what we have to call? Retained earnings. That's it. Name only change, not the treatment. So this amounts to 1 lakh nil. So here 60,000 and 1,40,000. total 1,60,000 and 1,40,000. So less share of non-controlling interest at 25%, which amounts to 40,000 and 35,000. If you reduce, what you get is share of H limited at 75%, which comes to 1,20,000 and 1,05,000. Yeah. So this both will go to step number 5. This will go to step number 6, cost of control. This will go to step number 8, reserves for CPS. Then step number 5, non-controlling interest. Non-controlling interest at 25%. At 25%. To start with, first is share in capital. Share in capital, it is 6 lakh into 25%, which amounts to 1,50,000. Next, capital profit.
50,000.
Capital profit 40,000. Revenue profit. 35,000. So these two are from step number 4. Total. So in this problem also, preference shares are not there. So therefore, only equity share portion was the outside equity shareholders are called as non-controlling interest. So therefore, it is 2,25,000.
Yes, sir.
2,25,000. Next, so step number 6, cost of control. Cost of control. So here also liability route. In majority of the case, we are going to use only liability route. Only in any of the problems, suppose if the NCI measured purchase consideration, this information, if it is available, then only we will go with asset route, otherwise not. So cost of investment. Cost of
6 lakhs.
investment, which is 6,75,000 less pre-acquisition dividend. Pre-acquisition dividend wrongly credited to P&L, so which amounts to 60,000 into 75%. So what is 60,000? What is
Dividend.
60,000?
Total dividend.
Total dividend. So which we have done in step number 3B. So therefore, what is net cost of investment?
630.
It is 6,30,000. So out of that, less share of net assets. Less share of net assets. So liability route. Therefore, it is share in capital. Liability route means what? Share capital plus reserves and surplus. Correct? So that too,
Yes,
capital reserves. So that's what here we take capital profit. Revenue profit will go to step number 8. Share capital 6 lakh into 75%. 75%, which amounts to 4,50,000.
50,000.
Capital profit as per step number 4. Is it 1,20,000?
Yes, sir.
1,20,000, correct?
Yes, sir.
1,20,000. So therefore, net
570.
5,70,000. So if you get, so here still a shortfall is there. Therefore, it is termed as what? Goodwill. Goodwill 60,000. Goodwill 60,000. Next, step number 7, intercompany owings. So here no other investments, only equity share. If there is a preference share or debenture, I would have cancelled here, but here nothing. So intercompany owings, intercompany owings, intercompany owings. So out of that here, debtor creditor. So what relationship we had? Yeah. Debtors of S Limited includes 25,000 due from H Limited. So that's it. So only debtor creditor. So no URP, nothing. So only debtor creditor. Debtor creditor. Debtor creditor. So here. So total debtors. Here. Total creditors. So balance as per balance sheet total debtors, it is 60 plus 225. So sorry. It is 2,80,000.
Yes, sir.
2,80,000. Total creditors,
3,60,000.
it is 3,60,000. Intercompany owing is 25. So 3,60,000. So in that, what is less mutual owings? Mutual owings. So 25,000. 25,000. Therefore, what is balance to CBS? Balance to CBS, which amounts to
2,55,000.
2,55,000 and 3,35,000.
35,000.
35,000. So that's it. Now let's go to step number 8. Step number 8, reserves. Reserves to CBS. To start with, here we have general reserve. General reserve and P&L. Now H limited balance as per balance sheet. H limited general reserve balance as per balance sheet 1,20,000 and 2 lakh. Next, share from subsidiary. Share from subsidiary. Subsidiary S limited. So here revenue reserve is nil. Revenue reserve nothing. Revenue profit which is I believe 1,05,000. 1,05,000.
Yes.
So thereafter, so in this P&L, in this 2 lakh H limited dividend, which was there is a pre-acquisition dividend, wrongly they have included in this 2 lakh. Therefore, we are deducting pre-acquisition dividend. Pre-acquisition dividend wrongly credited. Wrongly credited to P&L, which is 45,000 minus. 45,000 minus. So that's it. No URP, nothing. So therefore, what is total for CBS? Total for CBS 1,20,000 and 2,60,000. 2,60,000.
2 lakh.
260, right?
Yes, sir.
Yeah, so 105 minus 45 is 60,000 plus 2 lakh, 260, correct. Yeah, so now required solution. Required solution. So required solution is what?
Balance sheet.
Very good. So balance sheet of consolidated, that too. Consolidated balance sheet of H Limited and its subsidiary yes limited as on 31st March 2018. 18.
Yes, sir.
To start with, first is assets. Assets, note, amount. So first asset is non-current asset. Non-current asset. Under non-current asset, so first one is here. So they have given the split land and building, plant and machinery they have given. So both we have to include in what? Property, plant and
Okay.
equipment. Property, plant and equipment. Property, plant and equipment, note number 1. So thereafter, intangible asset. Intangible asset hyphen goodwill. So step number 6. Goodwill we got 60,000.
Yes, sir.
60,000. 60,000. Next, do you have any financial assets, non-current financial assets such as investments, etc.? So here investments in a subsidiary company would have been cancelled on account of consolidation, therefore it will not come. So that's it. Next to two, current asset. Current asset. Under current assets, first one is inventory. Inventory. So here no stock reserve, nothing. So therefore you can directly add it. No split is required.
130.
1,30,000. So 1,30,000 in total. In total. Then debtors and bank are classified into financial assets. Financial assets. Under financial assets, debtors. So copy as per step number 7. So debtors is debtors
250.
2,55,000. Then cash at bank net 4,35,000. 4,35,000. So that's it total. Next, equity and liability. Equity and liability. Equity and liability. Equity and liability. So in equity and liability, first one is shareholders fund. Shareholders fund. Under shareholders fund, share capital. Since I have shown how the presentation has to be done, so here no change. Therefore, share capital of holding company directly 12 lakh I'm taking as it is. Then other equity. Other equity, note number 2. So then non-controlling interest. interest. This is step number 5. I think it is 2,25,000. 2,25,000. Check it out.
Yes, sir.
Yeah. So that's it. Next, number 2, current liability. Under current liability, financial liability. Under financial liability, creditors. Creditors. So this is as per step number 7. 3,35,000 total. So now we required was note 1, property, plant and equipment. Plant and equipment. Property, plant and equipment. So under property, plant and equipment, so first one EA, which is land and building. Land and building. So here, so either H limited, S limited split you give, or or sum up in a case 2,20,000 plus 2,80,000 put together 4 lakh, sorry 5 lakh.
Plan.
5 lakh, 5 lakh, correct. So then B, plant and machinery. Plant and machinery 4 lakh plus 3 lakh 60,000. Either you write 1 on 1 H limited, S limited, or in this column. So it is 7 lakh 60,000. In total it is 12 lakh 60,000.
Yes, sir.
Yeah. Go and update 12 lakh 60,000. 12 lakh 60,000. So then note 2 is other equity. Note 2, other equity. So under that, first one is general reserve. So general reserve and profit and loss account. So both are from step number 8. So here in this problem there is no capital reserve. Instead that we have the goodwill. So therefore goodwill already we have treated it. So it is general reserve, copy from step number 8, which amounts to 1,20,000, 1,20,000 and 2,60,000. Yeah. So that's all I believe. It is 3,80,000. So 3,80,000. 3,80,000. So check out your balance sheet total, whether it is tallied or not. 21,40,000.
Okay.
21,40,000. Here also 21,40,000. 21,40,000. This is problem number 7. So here one adjustment was just a pre-acquisition dividend adjustment, and for add-on intercompany moving debtor cancellation they have given. That's it. So over a period of time, one-on-one problem. So it will keep on increasing your adjustments.